Another day, another fresh episode of Business Morning coming to you on Channels Television. Good morning and welcome. I'm Ini John Mekwa. Well, we start with latest data by the National Bureau of Statistics, which shows that Nigeria recorded a negative trade balance of 3 trillion naira in the third quarter of 2021. According to the statistician general of the Federation, Mr. Simon Harry, the total merchandise trade statistics of Nigeria as at the third quarter of 2021 stood at 13.3 trillion naira, with its export component at 5.1 trillion naira, while imports stood at 8.2 trillion naira. He attributes the deficit largely to increase in import of motor spirit, gas, oil, imported motorcycles, among other factors. Well, from there, we go to the aviation sector, which is struggling with first dollar shortage, which is threatening foreign airlines flying into the country, as well as firms selling tickets to intending inbound passengers. And now the travel bans imposed by Canada and the United Kingdom on Nigerian passengers. This has become another hurdle for players in the industry. Aside from Canada and the UK, Singapore, Indonesia have also imposed travel ban on travelers from Nigeria following the outbreak of Omicron variant of the COVID-19 pandemic. The Minister of Information and Culture, Alhaji Lai Mohammed, has described the red listing of Nigeria by the UK over cases of Omicron variant of the COVID-19 as unjust and discriminatory. He urges the UK government to rescind their decision immediately.
The decision by the British government to put Nigeria on the red list just because of less than 2,000 cases of Omicron, which, by the way, did not originate in Nigeria, is unjust, unfair, punitive, indefensible, and discriminatory. The decision is also not driven by science or common sense. How do you slam this kind of discriminatory action on a country of 200 million people just because of less than 2,000 cases? More importantly, whereas British citizens and residents are allowed to come in from Nigeria to Britain, non-residents from the same country are banned. The two groups are coming from the same country, but being subjected to different conditions. Why won't Britain allow people in both categories to come in and be subjected to the same conditions of testing and quarantine? This is why this decision to ban travelers from Nigeria who are neither citizens nor residents is grossly discriminatory and punitive.
Well, just when the world was getting ready for the festivities at the end of the year, then we have all of this. We'll see how that plays out. Meanwhile, we'll head to our commodities space to talk about what's going on in global oil price with global oil prices and how it's affecting Nigeria. But that will be after the break. To stay with us is Business Morning on Channels Television. Welcome back. Well, oil prices edged up today after a near 5% rebound the day before, as concerns about the impact of Omicron variant on global fuel demand eased. Iran nuclear talks hit roadblocks, delaying the return of Iranian crude supplies. Brent crude futures rose 60 cents to $73.68 a barrel, while U.S. West Texas Intermediate crude was at $70.23 a barrel. In a sign of confidence in oil demand, the world's top exporter, Saudi Arabia, raised monthly crude prices on Sunday. This comes after OPEC Plus agreed to continue raising output by 400,000 barrels per day in January, despite the release of U.S. strategic petroleum reserves. In addition, a delay in the return of Iranian oil supported prices. Indirect U.S.-Iran nuclear talks have hit roadblocks. Germany urged Iran on Monday to present realistic proposals in talks over its nuclear program. Meanwhile, Iraq has also expressed optimism over demand and higher prices, while global oil and gas executive warned of underinvestment and the need for fossil fuels despite a push for cleaner energy. Well, let's talk about happenings in this oil space, and of course, as it affects Nigeria, with Bolanle Agbaje, analyst with Financial Derivatives Company. Good morning, Bolanle.
Hi,
Good
good
to have
morning.
you.
Thank you for having me.
So what's going on? I mean, first of all, let's talk about this hiking of price by Saudi Arabia in the midst of, okay, the concerns on Omicron is reducing, but then you have OPEC Plus has agreed that there'll be
Increase,
increase in
yes,
supply.
of about.
Iran, okay, their talks have hit roadblock, but what gave them the confidence?
Well, looking at the fundamentals, the inventories are still tight. And I'm sure OPEC Plus have generally studied the markets. I think they usually have monthly meetings now to kind of evaluate how the market is playing before making their decision. So they're still confident that, the market is still tight. Demand is still much higher than supply at the moment due to the seasonal effects. We're still in the midst of, in the highest part of the winter. And they do expect that, demand would increase. So Saudi Arabia increasing its price, I think that's a positive signal on, the trajectory of oil prices in the short run.
And what about the Iran talks? Do we see an end?
I definitely do, because obviously the U.S. government is much more, friendlier, I would say, when it comes to, the relationship between Iran and the U.S. But if we do see Iranian oil coming into the market, I think that's when we would, start to see chances of oil prices pulling back a bit. But at the moment, the 400,000 barrels a day that they've agreed to pump into the system, I'm sure they've evaluated the fact that, this wouldn't reduce prices as it should. And we've seen evidence of that. The only drawback to prices we had seen in the previous weeks was this new variant that had come into the market. But so far, so good. It seems like it's nothing to fear. And it's kind of easing the fear in the market at the moment. So those are the...
Yeah, but if oil or the oil space is not showing so much concern, about Omicron,
Yes.
then why are countries, banning trips and affecting the growth in the aviation, especially at this time? This is the festive
Yes.
period where a lot of people, and Nigeria or the African countries seem to be getting a lot of hits. I
Yes,
mean,
so you'll definitely be more concerned about Nigeria in this aspect. And I think, apart from the health, aspect of the new variant, we also talk about the political aspect. When you're looking at what the UK's decision to, ban or include Nigeria in the ban list, I think it comes to question the data integrity and reliability of data within Nigeria at the moment. The UK had mentioned that they had seen about 21 cases that had been gotten from Nigeria, whereas Nigeria was reporting only 3 cases. So the data integrity and reliability is what I think they're more concerned about, as opposed to the racist part of it. And from what we had seen from about last year, it seems like the aftermath or the after effect of, this virus is what most countries are trying to avoid. We've come this far from about 2020 till about 2021 this year, and some of these countries have spent so much to get their countries back to this level, and I'm sure any slight case of
but they have more cases than us.
yes,
I mean, if you look at the UK, for instance.
I would think this as a precautionary measure on the UK side. I know it seems like, there's some racist aspect to it, but I think most of these countries are only trying to understand what this new variant is saying. I know Canada had also done the same by including Nigeria.
They were the first.
Yes.
Even before the UK.
But Canada, if you look at the history of, since the COVID started, Canada has been the most cautious country so far. They're the ones that have, apart from Australia, they're the ones that have pulled back with, easing travel bans for most countries, not just Nigeria. So any signal of, the variant happening or the variant existing in South Africa, Nigeria, I'm sure
But have they banned flights from the UK? I mean, these are questions,
Yes.
that bog people's mind.
It does.
Because, I mean, if we look at the cases, Yes, I mean, you talked about the integrity of our data and our
Yes.
system, reporting system,
Yes.
and all that.
Yeah.
That, of course, is an issue.
Yes.
But I mean, even right there, we see a lot, and yet there are no bans. They don't ban each other.
I think the mindset would be that, you know, most of these they believe the Western countries can more or less handle, you know, this COVID cases better off than the Africans. I think that's the mindset, which might not necessarily be true. But the UK government has come out to say they will reevaluate this after 3 weeks. So let's hope for the best. But obviously, we have to face the fact that, you know, this particular month, which we had expected, you know, more travelers coming in, both business and
Yeah.
holiday travel, we're going to miss out on that. And the fact that, you know, investor confidence would also be affected. So it's not great news for Nigeria, but I think there's nothing we can
I
do at the
guess this
moment.
is also a challenge to the African continent to look
It
inwards
is.
because, I mean, we don't really.
And be as sustainable as they can be. So
Exactly. I mean, if you, I was having a discussion with some of my colleagues early this morning. How many Americans actually travel so much outside
yes.
America? You know, they want to go on vacation, they go to another state.
State, yes,
And we've
exactly.
got
And we
all of
don't,
that.
no, we don't even have that culture. Nobody is traveling to, let's say, Kwara or something, or
Exactly.
another
Or
state for,
Taraba, where you have the Mambila Plateau.
or Calabar. A lot of people don't, you know, find that. It's also a mindset, the Nigerian mindset. We don't believe that what we produce is good enough.
And
And
so
that,
that's
you know,
why
plays
others don't
into,
also have the confidence.
they don't have the confidence. And it also plays into our commodities. Like the commodity space is something we had spoken about severally. When Nigerians produce certain commodities, the Nigerian consumer is still, you know, apprehensive in consuming those particular commodities. They question, you know, the quality and, you know, the fact that, oh, it's Nigerian produced. I think at the time they introduced the Nigerian rice, that was, you know, what was going around. And I think still a lot of Nigerians still don't buy, you know, Nigerian rice, except they're forced to, you know,
Yes.
their
Or they are
pockets.
tricked to.
Exactly. So a lot of the foreign rice is still circulating amongst the middle to rich class. So it's still a problem, and it would be played in different aspects of the economy.
So how does all of this affect the commodity space, you know?
Well, regarding oil, so far so good. We do expect that, you know, as long as, you know, there's no significant effects from a significant increase in supply from Iran,
Okay.
or, you know, the Omicron variant is not detrimental to, you know, the health of the economy. We don't expect, you know, oil prices to decline so much. So that's great for us, for reserve accretion, for, you know, boosting our revenue. But with other commodities at the moment, we're definitely seeing increase in the supply of these commodities. So prices are relatively, you know, flat to, you know, low at the moment, except for the price of cement and rice. But it's good. It's great for commodity prices currently.
And then we still have cooking gas and
Yes.
now we have a shortage in supply.
Yes, and
What's causing that?
there was always shortage in supply. I think a few
But now I
weeks
think
or
it's 5.5% more than it was
yes,
before.
but at the moment, you know, last month or 2 months ago, the Nigerian LNG had come out to say they were going to increase supply, but it seems like this is not enough to quench the demand in the market, and most consumers are forced to look for other substitutes. We do have an LPG challenge. I saw recently that the vice president is going to Dubai for an LPG summit. So hopefully there are positive, you know, there's something positive to come out of that when it comes to investors. I think we need more investors in that particular
Investors in what
space.
area?
Mainly infrastructure. Because I think with LPG, lack of infrastructure to pass this gas, you know, into major communities is a major challenge. It's very difficult. You know, you need to have, it's highly flammable as well. So a lot of business owners would not want to venture into that aspect because of the increase in cost. So that's looking for suitable investors that actually understand the channel of producing and distributing the LPG is a major, you know, challenge. And I think, you know, most people had focused on oil, or most investors had focused on oil because it was highly profitable, No one wants to focus on gas. You know, we talk about the fact that there's gas flaring, increase in gas flaring and all that within the economy. And it's something that the government needs to obviously work at in getting or trying to gain more investors in that space.
So what would we say? Would we say that the government has made this sector attractive enough? Because we've been having this discussion for some months now.
There definitely has to be some government partnership,
Okay.
because, like I mentioned, the lack of infrastructure, you need to wire pipes, you know, across major cities within the country. It's a very difficult and highly,
and then there's the
costly
security.
project. And the security issue, vandalism, you know, so nobody wants to venture in that if they don't feel like they have the partnership with the government. So I think those are the aspects that we like. With oil, you have, you know, NNPC, you know, controlling the major aspects of, you know, oil. You need to have the same for the gas aspect.
So when you
things.
say people would like to have partnership with the government in this area, what exactly do you mean? You want the government to have a company that can work with individuals?
Not necessarily a company, but like some joint venture, for example. So the government comes in and says, okay, would more or less supply some of the pipes within the space, and all you have to do as an investor is invest in producing this LPG and making sure that it's being distributed effectively to those consumers. So, you know, something like producing or introducing pipes within the cities is highly costly. So I don't think it's anything that any investor would want to.
But is the production process longer or shorter than the oil?
So I'm not too sure about the specifics, but I think, you know, when it comes to gas, it will more or less be identical, but you just have to have different channels to pass this. So they can't use the same pipes that they use.
Sure.
Yes.
Because they're different elements.
Yes, they're different elements. And even understanding how to, because LPG is a part of LNG, or natural gas.
Natural gas.
So that's so trying to get that aspect is.
Because the name actually suggests that it should have less production process and make it easier.
So it's liquefied natural gas, more or less. But you know, trying to pass this across to consumers is very difficult. You know, the agencies that control, or the body that controls the, you know, gas aspect of the economy has come to mention, you know, several aspects of the fact that it's hard to produce this particular product.
All right. Well, Christmas is around the corner.
Yes.
What's going on with festivity, commodities?
Yes.
What's going on?
So with the commodities, we do expect that, you know, prices remain relatively stable.
Stable,
yes.
Not high?
Not necessarily high. Like incomes are squeezed. We don't expect, you know, this would have started towards the end of November, because most people purchase ahead of time. But we do expect that even if prices increase, there has to be something drastic. So if demand picks up significantly, then we'll see the price of major, you know, commodities that are driven or that are consumed during the Christmas period. So like the price of rice, tomatoes, but currently the price of some of these commodities are relatively stable.
It would be nice to know if this hike in the price is artificial or if it's really necessary, you know?
It's a demand. But then again, the data integrity comes to play in this aspect as well.
All right. Thank you so much, Bolanle, for sharing your thoughts with us on some of the issues on the commodity space this morning. Enjoy the rest of your day.
You too.
So we'll take a break now. After the break, we'll look at happenings in the transport sector. Like we know, the Transport Summit started yesterday. We'll have a feel of what's going on there. Do stay with us. It's Business Morning on Channels Television. Welcome back. Well, the ongoing Transport Summit has been a time to interrogate and prefer strategies and solutions for sustainable transport development in the country. We have to elaborate on conversations going on at the summit and a whole lot more going on in the maritime and all that. We have Emeka Akabogo, senior partner with Akabogo and Associates, joining us. Good morning, Mr. Akabogo. Good to have you on the show.
Good morning, and thank you very much for having me.
So this is the third Transport Summit. How effective would you say the summit has been, because I mean we do have a lot of talks in Nigeria, but when we talk about implementation, then it seems we have to look again. How effective have these summits been?
Well, at every point in time, you need to talk to identify how far you've gone in implementing measures which have been proposed, what challenges that you've identified, and what needs to be done. You need to talk to be able to share experiences and develop policy. So I think the Transport Summit, which is ongoing, is very useful, and it continues to increase the opportunities for the operators within the industry to better their operations, and more importantly, to propose policy directions for governments, which remains an area of concern to operators in the market.
The issue of intermodal transport still exists. I mean, transportation, when it comes to connecting one mode to another, moving from the rural products, especially agricultural produce, from the rural to, the urban, the city, where consumption is actually high, still exists. How do you see these challenges being addressed?
Yeah, actually, that's actually one of the most important challenges which we have, not just as a country, but as a continent. We talk about the Africa Continental Free Trade Area, and the biggest challenge to the ACFA is logistics, intermodal movement. So a container a container ship comes in from China, and it costs more to move it from Lagos to Onitsha or Lagos to Abuja than it costs to bring it from China. So it's an important challenge. So intermodalism is one of those key issues which, as an industry and as a country, we need to ensure that we improve all relevant aspects. So the roads are bad. The interfaces between the states, the interstate jurisdictions, have challenges, and the regulatory bodies that are in charge of these things need to also become more cooperative in their engagements. So there are quite a lot of issues which affect intermodalism. And it starts from the beginning, which is from the port where the cargo lands, to even exiting the ports, then to ensuring that in the course of the movements that you've got free movement due to with good roads and good regulatory interfaces across the states. Then, of course, finally, you need legislation, because and it's one of those areas where we are still a bit short. Intermodal legislation which takes account of the liability of parties as the cargo moves from the ship to the land, from land to rail, and eventually from rail or truck into the warehouse. So these are areas where we need to focus a bit more attention to streamline operations, to ensure that investments are safe, and to ensure that parties who are operating within the system have respect for the economic interest of the others.
I guess there are two aspects to this. The first is, I think you mentioned it when you talk about enforcement agencies and some experiences that investors and individuals have had, from moving from one point to the other, moving, for instance, from the port to one state or the other to the delivery of the goods. The experience with enforcement agencies, that's on the one hand. And the other would be the issue of infrastructure, for instance, the attempt to connect the ports in Lagos to the rail. Do you think that there's enough attention, or would I say collaboration, when it comes to PPP, public and private partnership, in building this infrastructure and also in regulating the enforcers of the law, along these routes?
There's certainly not enough synergy. there's certainly not enough uh, efforts to optimize public-private partnerships. And these things are core to ensuring a sustainable approach to intermodal transport. Take PPPs, for instance. Public-private partnerships work on the basis of trust between the investor and the government. So the investor needs to trust that the government is committed to its undertakings under the agreement. And we're not seeing enough of that. So in the port system, for instance, even while we have muted success in the port concessions, but there are very important commitments of government which are not being met and which were baseline benchmarks upon which these public-private partnerships came into effect. For instance, dredging of ports. We find that ports like in Calabar, for instance, are not properly dredged. And investors in those ports invested on the commitments of government to ensure routine dredging. But that's not happening, and a lot of investment is being lost. So as it comes to the rail, you've got the need to incentivize investors in rail systems. Governments can't do it alone. And government actually also needs to understand. One of the challenges we find is that governments want to exercise significant control at all times. But government is not in a position on a sustainable basis and to achieve efficiency to fully control the operations of the rail. We should unbundle the operations for rail as much as we have done for port systems and to some extent airports, so that individuals can invest in rail tracks, can invest in coaches, and can invest in even stations. These are all components which ensure that under a framework that guarantees profits and returns, then the market can benefit from the efficiencies which are put in place. So it is still a big ask of government, and government needs to do a bit more in that regard.
Well, let's look closer at the maritime. For the first half of 2021, the International Maritime Bureau reports that piracy in the Gulf of Guinea fell to the lowest since the second quarter of 2029. For the same period in 2020, it was 98 incidents. Meanwhile, for 2021, it fell to 68. You know, obviously a good one for countries around the Gulf of Guinea. Now, the Deep Blue project was launched in June. We're trying to understand what brought about that drop in the insecurity reports in the Gulf of Guinea. Can we link it to the Deep Blue project?
Well, I want to believe that to a limited extent, yes, you may link it to the Deep Blue project to the extent that if you are a criminal, if there are criminals who are in the open waters and they see that there is a lot more effort, a lot more infrastructure, a lot more capability to detect and deal with criminality, chances are that they may, from the point of view of caution, limit their activities until such a time that they determine that the infrastructure is working or is not working. So yes, to some extent. However, you can see that the drop started occurring before the launch of the Deep Blue project, and the drop could equally be attributable to some other measures which have been ongoing in the broader Gulf of Guinea area, including recent deployments by one or two foreign navies. So, but I think at the end of the day, the drop is attributable to a range of factors which have worked together. And the challenge is in sustaining that drop. We want to see that at this time next year, that drop is seen to have been maintained, and in fact, even to have dropped further. We want to see that the criminals are mindful that indeed government has not just launched a Deep Blue project, but that the Deep Blue project is effective. So we want to see a lot more patrols going on across the entire breadth of the Nigeria territorial waters. We want to see a lot more cooperation between Nigeria and its neighboring countries. We want to see even cooperation between the states and private actors who are able to work together in preventing and dealing with maritime incidents. Okay, so we need a lot of synergy and a lot of cooperation and a lot of efforts to ensure that the drop we have seen is sustained over a period of time.
Okay, so since we recorded this drop, has there been a difference in maybe movements, goods that move around the Gulf of Guinea as it comes to Nigeria or off Nigeria? Have we seen the benefit of it?
It's early days. It's early days. Don't forget that if we are if we are working within the international space, a lot is about perception, and a lot is about the futures. So if if as at today, um, you're trying to lock in a trade that is going to happen in 3 months' time, for instance, and the partners that you're dealing with are looking at the indices and indicators that affect that trade. One of them is security. And if they look at the numbers today, compare the numbers today to the numbers a month ago, then they'll say, okay, good. The indicators are positive. There's been improved statistics. So we can deploy further. But we hope that these indicators will be sustained. So yes, I believe that the indicators would improve the trade within Nigerian waters. It should improve the perception of the security situation and probably reduce the high premiums which are charged on Nigerian-bound cargo. And it also will improve the investment decisions of parties who are interested in locating facilities in the offshore locations. But they need to see these decisions are made on the basis of evidence, sustained safety or sustained enforcement of whatever measures which we're talking about. So they need to see that at the beginning of 2022 to the middle of 2022, that it is sustained and it's not just a one-off thing. So in answer to your question, I'd say, yes, I think that it will lead to improved investment decisions and improved trade within the region if it is sustained.
From your perspective now, I know we have the Deep Blue project. Is that enough, to sustain this security that we need? Or are there some ingredients that you think should be added, to actually convince investors, potential investors, that the waters are safe for Nigeria?
No, certainly. We need to do a lot more. The Deep Blue project is just one. And first of all, in doing more, the Deep Blue project has to be implemented effectively. It's one thing to have assets. It's another thing to ensure that those assets are put to work on a routine basis. So there's a human side, there's a capacity side, there's a coordination aspect to it. And all these need to work together. And if they don't work together, then the assets are useless. We've had the experience in this country where we have had lots of assets, invested lots of money, and the assets wasted. We don't want the Deep Blue assets to waste. So that's one part, ensuring that the assets are effectively deployed and effectively coordinated in their usage. So that's one. But the other relates to lots of relationships across borders within the Nigerian maritime community, Nigerian maritime and security community. Cooperation within governments, within government agencies. The NIMASA needs to cooperate with the Navy, with the Ports Authority. There's got to be cooperation with the private sector, operators who own ships. Everybody is a stakeholder in this process. So we need to see a lot more activity on the human angle relating to coordination of interest and coordination of approaches. I've not seen enough of that happening. But of course, also, we need to look at the international arena and who is involved. Only last week, we had the incident of the Danish frigates, which was reported to have killed 4 persons suspected to be pirates. As of today, we don't have any information on how that happened, under what circumstances, and if anything is being done about it. We need to have more information so that we also avoid a situation where even our sovereignty is compromised, as indeed it may seem to have been compromised with that incident of last week. So there are many moving parts which need to be coordinated, and those are the things that will give the confidence as to the long-term safety, security of investments and of operations.
All right, and then the Minister of Transport has called on foreign investors to invest in Nigeria Maritime, listing areas of interest to include automation and artificial intelligence, maritime freight and logistics services. Uh, you know, I think it's just one thing to call on investors, but I guess it's another thing to actually have things in place that will get their attention to come and put their money where you want them to put them.
Absolutely. You just hit the right spot. You need to have a framework which is happy to accept these investments. And with specificity on the issue of automation and artificial intelligence, I agree with the minister industry, particularly within the space for trade facilitation. So you see that there is cargo remains stuck in Nigerian ports for a long period. The cost of doing business in Nigerian ports is very high. In fact, arguably the highest in the world. Okay, and this is as a result of very archaic procedures. And Nigeria is signatory to the trade facilitation agreements. Yet, Nigeria is not implementing any or most of the commitments which it has signed on to under the trade facilitation agreement, including elements which touch on automation. We need to have domesticated that agreement. We need to have converted, we need to have repealed and reenacted our Customs and Excise Management Act to take account of our commitments under the Trade Facilitation Agreement. We've not done any of that. And if we've not done any of this, then those people you are calling to invest will not be able to invest because the framework for that will not happen. It's like what is happening in the oil and gas industry. People can't invest when the legal framework is not there. It's only recently that we've passed the PIA. So the legal framework to ensure that investment in artificial intelligence and automation in the Nigerian maritime industry needs to be in place, including, apart from trade facilitation, including within the flag administration scheme. So I do agree with you that while the minister is right on the need to, on the call for investors, it is important that we, within the scope of what we can do create that framework to ensure that investors are happy to invest. And they need not be foreign investors, even local investors will be happy to do that once that framework is in existence.
All right, we have to thank you so much, Dr. Emeka Akabogu, Senior Partner, Akabogu and Associates, for giving us a little bit of conversations going on at the Transport Summit, which is ongoing today. Well, just before we go on break, let's see what's happened in the market yesterday. We start with equities. At the NGX, the market was once again in the red. This has been the trend since last week, unfortunately. The market shed 0.38%, and the market cap went down to 21.920 trillion naira. Another 0.38% drop there in the market cap. For the activities were actually in the green. That's a sign of profit taking. You have volume was in the green, 422.18 million, value 4.47 billion naira, and the deals were certainly more than that of Friday, over 5,000 deals yesterday. A lot of activities going on, just not input there. And then the sectors were just in the red. Banking was down 1.37%. Consumer goods down 0.34%. Industrial goods 0.58%. Insurance almost 2%. Oil and gas also down 0.11%. What a sea of red. All the sectors are affected at this time. From there, let's go to the OTC market. It was unchanged yesterday after the trade. The NSI was 745.44 market cap, 617.86 billion naira, and only 6 deals yesterday at the NASD, and volume 158.770 at 1.01 million naira. Well, let's go to the FGN bonds now. The most attractive yesterday was that of March 27, 2050. It had 3 deals yesterday valued at 400 million naira, and followed by 18th July 2034 that had 2 deals. And then, of course, you had 23rd of February 2028 and 17th of March 2027. 15 million and 1 billion respectively. A total of 8 deals on the bonds yesterday at value of 1.45 billion naira. The Treasury bill had 12 deals on October 27th, 2022, and just 1 on October 13th. That's on the NTB, the Treasury bills. The value after trading yesterday was 58.78 billion naira. Well, let's go to the CBN bills now. The CBN bills, you have just 1 transaction there on the 28th of February 2022. Well, it was valued at 1.5 billion naira. And then finally, an OMO market, open market bill, we had 2 deals valued at 750.63 million naira, 2 deals yesterday. Well, we hope that the market will be brighter today. We'll not lose hope. We'll keep hoping. But we'll take a break now. When we come back, we'll do an opening call to London. Do stay with us. You're welcome back. Well, there's a property boom in the United Kingdom, and house prices have grown at the fastest pace in 15 years over the past 3 months. Well, let's have Juliana joining us now from our London studio to tell us how this is affecting her and some other residents there. Hello, Juliana. Good morning.
Good morning, Annie.
So we just want to know how. I mean, we've talked about the house prices for months now. How is this affecting average residents like you in the UK, in London?
Well, I suppose if you are lucky enough or fortunate enough to have a property, then this could be good news if you're thinking of selling. But considering Prime Minister Boris Johnson is interested in generation buy other than generation rent, it could be pretty difficult to get on the property ladder at the moment. As you were saying, Halifax have just released their latest property market index, showing that we have had the most expensive quarter in the past 15 years. The average price of a home has now risen to £272,000. Again, as I always say, this is really for a home outside of London or the M25 bubble. If you want to buy within that bubble, you're probably going to have to double your price for that. This is risen £20,000 in the past year alone, about £37,000 since the onset of the pandemic in the UK in March 2020. And there are a number of reasons why the house prices have risen. We did have some pretty decent savings incentives from Chancellor Rishi Sunak. So this was hacking the stamp duty tax, which saved people up to £15,000 to £20,000, and lots of people were buying that. That was phased out, but finally ended at the end of September. Lots of mortgage rates are more competitive. Also, as well, as part of the government's Generation Buy campaign, lots of mortgage providers are now offering 5% mortgages, meaning you only have to put a 5% deposit down and the rest will be backed by the government. But if you're thinking of buying a property in the UK for about in London for about £400,000, it's going to be about £20,000 that you have to put down. Looking at some wages, a lot of people can't afford it. How long is this going to last? A lot of experts in the sector don't think it will last that long. Of course, there's lots of fear and concern about the new Omicron variant. Also, as well, inflation rates are likely to reach by about 5% by next spring. So considering your interest rate payments are going to be higher, that could be a concern. But at the moment, the bubble keeps on growing. When will it burst? We don't know for sure.
Yeah, we'll certainly be following to know when it bursts. Well, we're hearing of a planned industrial action in Tesco. What's this about?
Yeah, this story first broke yesterday, actually. I discussed it with Laddie on Business Incorporated, but it has grown. Yesterday, the Unite union announced that about 1,000 of its workers working in warehouses and distribution would be taking this industrial action because they're not happy with a planned pay increase of 4% annually. We know that at the moment the cost of living has risen by about 4.2%. The retail price index shows inflation at a level of 6.2%, and they just believe, these workers within this union believe that that's just not enough. They don't feel that they're being compensated. But now there's a latest update. Now 5,000 members of the US Door Union are also going to take this industrial action. This is certainly going to affect people within those regions in the run-up to Christmas, because they will be stopping for 48 hours from 6 a.m. on the 16th of December. Then there'll be a further 5-day stoppage beginning on the 20th of December. So that takes you right up until Christmas Day. We're yet to see whether this is going to be called off, though it could be unlikely, because a spokesperson from Tesco does believe that this 4% pay rise that they've offered is the most significant they've offered in 25 years. So yes, if you are living around those dotted areas in the country, you could potentially have a major issue, unless, of course, you go to one of the other big three supermarkets.
Wow. All right, Juliana, thank you so much. I'll talk to you later at 1:30.
Thanks, Ini.
So let's take a peep into the crypto market now. Laddie, yesterday was, well, an ocean of red.
Oh, yes. And today we've seen a couple of bounces, with traditional markets. We saw the FTSE 100 actually have a bounce, and the crypto market was not left out. So Bitcoin, they're bouncing back above the 50K range there. It's mostly green in the market. You see it's a strong green with a couple of altcoins also in the green, and we see the stable coins getting to the red position right now. We see the market cap there inching up about $2.38 trillion. 24-hour volume traded in the total market is up about 20.85%, and Bitcoin dominance inching down there at 40.59%. It's still staying around that 40% range. Price of Bitcoin at 8 a.m. about $51,152 is up 5.78%. And you know, once Bitcoin goes up about 5%, you see altcoins start to inch up double digits, about 20 and 30% there. 24-hour volume, $38.24 billion traded in Bitcoin. Price of Ethereum, you see it above the 4K range now, holding steady at $4,361 is up 6.24%. But some traders are worried, can they trust this bounce right now, or could it just be a dead cat bounce? It remains to be seen there. 24-hour volume, $28.40 billion traded in Ethereum. And top water market cap, you see it's all green there, with BNB, they're up 7.7%. Cardano, $1.45, up 10%. XRP still below $1, but at 84 cents there. Top gainers, we see it's double-digit gains there with BitTorrent there. It's less than a cent, but it's up 39.46%. You see Matic, $2.42 is up 32%. LRC, Loop Ring, back in the top gainers there after getting beat. It's up 32.18%. BSV, $147. And we see Rose there. It's up 24.57%. So, you know, it's looking quite green, but there's still caution, you know, in this market. Some traders are still, you know, wondering if there might still be a drawdown with the price of Bitcoin. So we're still watching Bitcoin because Bitcoin is the leader of this market, and whatever Bitcoin does, the altcoins actually follow. And we see XDC there with the top 5 losers. We see the losers are quite lean this morning. That's an indication that, you know, traders are looking more bullish and getting into the altcoin markets and Bitcoin there. We see XDC is up 1.84%. Down 1.84%. Algo, $1.79, down 0.97%. And we see Waves there. It's down 0.68%. And Solo, $4.48, down 0.48. So it's not looking bad in the market, but there's still caution because you never know, there might be another sell-off next Friday. Who knows? Everyone is on the defensive right now in most of the markets because you don't know where this market is going. Some say Bitcoin is going to break that 50K and stay above it. Some are still bearish. So it's quite a mixed market now. It's still a market filled with cautious traders, Ini.
Oh, you know, the irony of it is most of these markets actually follow the sentiment of the investors.
Exactly.
And yet the investors wait to see where the market leads.
Exactly.
You know?
So it's a very emotional market
Yes,
we see here. If it's a sell, everybody's shouting, sell, sell, sell.
All right, Ladi, thank you so much for bringing us up to date on happenings in the crypto space. And that's where we'll say thank you so much for being a part of the program today. We'll do this again at 1:30. That'll be Business Incorporated, though. We'll give you updates from the world of business. But tomorrow, I'll be back here for Business Morning. Thank you so much for watching. I'm Ini John Mekwa.